Before I share this strategy for small trading accounts, we're going to set up the technical indicator we'll use for it together. Select this one. Next, we go into the indicator settings to modify this box. Delete 1200 and type in 1155. Don't touch the other boxes, and we can also change the thickness of the moving average for better visibility. We can delete that and confirm. This technical indicator will give you buy and sell signals for scalping. I'm on a 5-minute time frame on gold, and we're going to look at the details of this strategy together now. I'll let the candlesticks run until the indicator gives us a buy or sell signal. You can see here the technical indicator is giving us a sell signal. With this red zone and this little red triangle here, the indicator estimates that at the close of this 5-minute candle on gold, it's better to sell. You also see the moving average in blue. And the first important point for this strategy is that when the indicator gives you a signal, that signal must break the moving average. The candlestick must break the moving average to the downside. That's the case here, so we can take a sell position. We always wait for candle closes to buy or sell. We put the stop loss just above the wick because we estimate that if the market returns above this wick, it could potentially continue its minor uptrend. For the target, you aim for a risk reward of 1.5. That gives us a target here, and you see the market hit the target just 15 minutes after your sell. We let the candlesticks run and wait for the next trade. We can see here that the indicator gives a buy signal. The problem with this buy signal is that while the candle giving the signal is indeed bullish, so the candle goes in the direction of the signal, however, you see that the candle doesn't clearly break the blue moving average to the upside. You really need a clean break to be able to take the trade, so I decide not to follow this trade and simply wait for the next signal. And we can see that the market very quickly after gives an opposite signal, a sell signal. Yeah, you can clearly see that after this candle giving the buy signal, the market hesitates. We have dojis, hammers, and in fact, it's a small range. So we were right not to follow the signal because here you see we would have hit the stop loss. However, this signal is very interesting because as you see, the candle giving the signal is bearish and also very impulsive. It strongly breaks the moving average to the downside. There's no hesitation, so we take a sell position. We put the stop loss just above the wick of the candle given the signal because we estimate that if the market breaks back above this small resistance zone, well, it's to go higher. And for the target, a risk reward of 1.5 as before. We wait until the market gives us either the stop loss or the target. We see that the market hit the target here. We wait until the next signal from the technical indicator. You can see that the indicator just gave a buy signal right here. Very interesting setup because you see that the candle given the buy signal is actually already well above the moving average. The breakout occurred on the previous 5-minute candle. The trade is very easy to take here because you can clearly see that in terms of price action, the market is breaking its bearish trend line to the upside. And so here with the bearish trend line breakout and the moving average breakout to the upside, you have excellent bullish price action. So you wait for the close of the candle that gives the signal. You place the stop loss right at the wick of the previous candle, and we look for a risk reward of 1.5 as usual. Here, once again, the target is reached by the market. This indicator is really effective because it's based on very basic concepts of technical analysis and price action. The indicator monitors momentum and gives you the best time to enter a position. We wait until the next trade. You can see that the technical indicator has given us a sell signal. Right here, we indeed have a bearish candle on the sell signal. Then, for the second step, you see that the bearish candle strongly breaks the moving average to the downside. Both criteria are met to take this trade. So, as you've understood by now, we wait for the close of the signal candle, entry price here, stop loss just above the wick here, and a risk reward of 1.5 as before. You see that very quickly, 10 minutes later, the market reaches its target.